Hey, welcome. Industries that are recession-proof. I've had some friends ask me about this particular topic, and I thought I'm going to put something together and put some thoughts and just share with others. So, throughout this video, I just want to share some thoughts on which industries are stable despite a slowing economy, and then discover which specific sectors can provide job security and optimal growth even when the market dips. So before we dig in on the sectors, I thought I would start with education. And this is vital, even in a recession. So even if there was not a recession or a depression or tough times, it is vital, especially in this new world that we live in. So I wanted to start with this topic. And what I mean by education, this can come in many flavors and forms. I'll share with you some thoughts about this. But number one, literally, it is indispensable. Education is essential for making it necessary even in the worst of times. I can speak for myself, just a quick comment on this. But back in 2015, when I was at IBM, I remember having a conversation with myself, and that literally was around how can I make myself indispensable as I was getting into my 50s back then. And I just spent so much time researching. And then eventually I came up with blockchain on how I want to dig in and double down. And I am so grateful that I decided back in 2015 that was the tech I wanted to hopefully create this shield around me in terms of being, air quotes, indispensable. Adaptability. So with the advent of e-learning and training modules, there is still a growing demand for skilled professionals in the education sector. So this is what I was alluding to. There's many forms of education out there, but now with COVID and people stuck at home, and then also just education in general, whether it's K through 12, higher ed, it's in question. And it should be. So there are so many other outlets in terms of education, like e-learning. If you have a passion, if you have a hobby, it's probably, most likely, it's out there. And then challenges. Education policies and regulations can change rapidly, adding complexities to decision making. You want to be abreast of this as you navigate through these uncharted waters that we now live in, and then opportunities. So career prospects with job security and affordable training programs offering opportunities for personal and professional growth. And if you are fortunate to work at a company that offers training programs like I had when I was at, say, Salesforce and or IBM, if there was a course, if there was a program that fit in my wheelhouse, I was taking it. And looking back on this, yeah, it soaked up some time, personal time, but zero regrets. All right, let's take a peek at some industries. These are in no particular order, but for starters is the XLK. That is the technology sector, and we'll talk about that in a few minutes. And then the NDX, NASDAQ 100. This is an amazing space to be in, and I'm going to validate that comment and also on these industries with a few charts on the next slide, so you can actually see with your own eyes how these industries are performing. And then the other one is the XLB. This is the healthcare sector, and I'm going to spend a few minutes on this. And the primary driver behind healthcare is this world is aging. So healthcare combined with the aging population, combined with the wealth that they have, they're going to transform the healthcare sector. And then XLU, this is the utilities sector as an example. Not a sexy place to be, but from a demographic standpoint, I'll share with you what I mean by that. This is a wonderful choice. So I wanted to share with you what these sectors look like from a technical perspective. So by the way, if you see this right here, it's NASDAQ 100. I'm going to share with you the NASDAQ 100 is layered into this, but I also have overlaid it. We've got about 5 other charts. I will start with the XLK. This is the XLK, and this is the technology sector. So this particular pattern, you can call this like a V-shaped recovery. You can call this a rounded bottom. But this pattern right here, this is exactly like the NVIDIA stock. For those of you that have had your eyes and ears on NVIDIA over the last couple of weeks, it just exploded. The reason why it exploded from a technical standpoint is because of this pattern. So this line that I'm drawing is called the neckline, and typically when price action breaks out above the neckline, it does one of these, and these are usually big. And again, that's what NVIDIA did. This purple line chart right here is the NDX. This is the NASDAQ 100, and this looks identical to the XLK, the technology sector, rounded bottom or V-shaped. Now, the NASDAQ 100 is not quite at the neckline like the technology sector, but to me, looking at this, high probability, it is just a matter of time. So these are just two really hot sectors. So this right here is the healthcare sector, the XLV. It looks nothing like these two beasts. However, this thing has just been chugging along, and one thing that I've noticed is for the last year or 18 months or so, there's a saying I like. And the saying is, the bigger the base, and this is the base, so it's just been basing since mid-2021. But the bigger the base, the higher, when this thing breaks out, the higher in space. I'm going to talk a little bit more about what's going to drive this. And then, by the way, this blue right here, this is the SPX or the S&P 500, and I just put that in there as a point of reference. Lastly is the utility sector, which is this orange colored one. It's very similar to the healthcare sector. And again, not sexy. It's been going sideways as well. Similar, not identical, but similar to the healthcare sector. So again, bigger the base, the higher in space. And I've done some videos on the utilities and energy sector. Unfortunately, I see utilities and energy going up, especially here in the States. So that is the bad news. The good news is this is going to create some jobs, which I will touch on as well. So let's talk a little bit about demographics. I thought this would be a good segue. And I could talk about demographics for hours, but for this video, let's just take a second on the US as well as China. So on the left is the US, middle is US, and right here is China. So I want to share this with you. So this is from the United States Census Bureau and still on demographics. So here is the US right here. Now, what I think is pretty cool, they've got this active population period right here. So again, the United States, and on the left are males, on the right are females, and the salmon colored, and again, the blue are the males. So again, from the demographic standpoint, this is really cool. So I'm going to go back in time to 1980. And then on the left, by the way, hopefully you can see this, this is the ages, and then down on the bottom is the population in millions. So I'm just going to do this. I'm just going to slide this so you can see how the population has changed over time. Again, this is in 1980, and I'm going to fast forward to current date. You can just see how the population in the US is evolving. This is 2015, 2020. And the thing I want you to focus on is right here. So this is the baby boomers. And I'm going to talk a little bit about that. So right now in 2020, this is the age of 55 to 59 and 60 to 64. So here's a big chunk of the US population. Down here, by the way, is ages 25 to 29. Again, this is back in 2020. And then right here is 30 to 34. So I'm going to fast forward again so we just see through time. So here's 2025, and I'm just going to stop at the year 2030. Here's what I just want to focus on. If we look right here, again, this is the year 2030. So this is the ages 65 through 69, right through here. And this is a big chunk of the aging population by the time they get to 2030. And I won't dig into this, but this is some goodness. This is what's really going to help the US, is the millennials. But the point I want to make is that between now and the end of the decade, and I've got some stats to share in a few minutes, that the US is getting older, which unfortunately, that's the unfortunate part. The good news is, though, it's going to help drive the healthcare sector. And if I just fast forward this, by the way, to the year 2040, 2045, and you can see by the time we get to the year 2060, that, yeah, our country is going to be aging aggressively. So healthcare sector is going to do well. And then just for kicks, let's take a look at the United States Census Bureau still, and we are in China. But I just wanted to make a point. So here is the population period, and this is really interesting, and no one really talks about this on social media or mainstream media, so I wanted to call this out. China. So back in 1990, so let's fast forwarding, just watch this on how this thing is going to evolve. So here's 2010. I'm going to go all the way to 2025. And what you can see is that the age 35 to 39, that's the biggest demographic. However, in second place, unfortunately, is age 50 through 60. But as we progress through 2030, you can definitely see the change. And also the really underneath these age 50 from 50 now to 65, we're still aging. So this right here is ages between 40 and 44, but watch this. Let's go all the way out. This is not good from an aging population. So you can just see that China, unfortunately, by the time we get to the end of this century, it's going to be aging. So it's going to be very interesting from a recovery standpoint. However, it's going to help drive the healthcare sector. All right, still on healthcare. So providing essential services. So number one, consistent demand. So regardless of the economic circumstances, people still need healthcare services. And number two, continuous growth. New markets and technology keep the industry expanding with the government and private funding, means stable opportunities for all. And so hopefully on the slide on the population pyramid, you can see with your own eyes why there's going to be consistent demand and continuous growth, what looks to be into the next few decades. And then number three are challenges. So from a challenges standpoint, regulations and insurance changes can make adapting quickly challenging. So high product and service quality expectations can also increase pressure on the healthcare providers. Number four is the opportunities. So career options and possibilities for innovation and research offer professionals really a stable career path. And hopefully that was validated in the population pyramid. All right, just a few more thoughts on the boomers demographics. So here in the US, age range. Baby boomers are generally defined as people born from 1946 to 64, and their total population, it's estimated that there's 73 million boomers in the US. From a retirement standpoint, as of this year, 2023, about 30% of the boomers are retired. Remember that population pyramid when we stopped at 2030? So that number, this 30%, is expected to reach just 50%. From a baseball analogy, if there's 9 innings, literally, we are in the first year. So there is, again, years ahead from a strong career opportunity in this space. Wealth. Baby boomers are the wealthiest generations in American history, and their median wealth for a baby boomer, the household, is $1.2 million. And this right here, boomers have money, and that's one of the reasons, besides just the sheer population, but they have money. And again, this is not just in the US, this is globally. But that money combined with the population is going to help drive a better healthcare system because they're going to spend money on improving their health. Speaking of health, so the boomers are generally healthier than previous generations. However, they are also more likely to suffer from chronic disease, heart disease, stroke, and the dreaded cancer. Okay, I thought I'd round out the healthcare sector with the top paying jobs between now and 2025. And by the way, my source on this is Google Bard, which I just pulled up on the day of recording. Number one, nurse practitioner. So the median salary, $115,000 US. And it's growing. That's a great growth rate at 53%. And then a PA, a physician assistant. I got a little typo right here, apologies. But the median salary is $115K, again, all US dollars, and the growth rate is 31%, so that's ideal. And then a PT, a physical therapist, their median salary is $87,000, and they have a nice growth rate at 22%. And then dentist, median salary, median, 164,000, and the growth rate is 11%. And I thought I'd put in veterinaries, because I don't know about you, but my parents have dogs, these little dogs, and all seniors just love their pets. So I thought vets would be a good one to include, but their median salary is 100,000, and the growth rate is at 17%. Government. I had to include it. This is the US's largest employer, serving the people. Essential services. So providing essential services and government contracts can remain liable sources of income for businesses and job opportunities. And I did a video on this a few weeks back. I talked about from the year, say 2021 as an example, and into 2022, not just in the US, but globally, all of these bills that are being passed, such as the infrastructure bill. If I remember off the top of my head, I think there was a $1 or $2 trillion being spent on that particular space. And that's just one bill, but there are several. And if you add them all up between now at the end of the decade into the mid 2030s, there's trillions of dollars coming from governments globally, let alone here in the US, which means there's going to be jobs. Sustainability. So stability and survival even when budgets and markets are fluctuating. This could not be a better space. So think of ESG, environmental social governance. I also mentioned this in a few prior videos, but according to Bloomberg, this ESG space, aka sustainability space, is going to be a $52 trillion space. Again, $52 trillion space globally by the year 2025. So it's massive. Now, all of this does come with challenges. The world is rapidly evolving, and unfortunately, there's going to be bureaucracy and frequent policy and leadership changes. So you want to make sure you keep an eye on that. That is going to be a major issue. So there's going to be hurdles, low hurdles, high hurdles, all over the place between now and especially through the end of the decade, because it has to keep up with all this rapid change. The top 5 paying government sector jobs between now and the year 2030. Number 1 is a cybersecurity engineer, median wage 110, great growth rate at 33%. We've got a data scientist at 100, looks like about 113,000. Another great growth rate at 28%, and then a information security analyst at 103,000, growth rate at 31%, and then we've got a software developer at 105, 22% growth rate, and then a financial manager at 124,000 and a growth rate of 12%. For me, living in the US, this is encouraging, because sometimes I feel like the United States is just going down this deep well. But when I see this is really encouraging to me personally. Consumer goods. I had to bring this up. So necessities, which we'll talk about, and then luxuries, which I thought this was very interesting. This is probably the obvious, but I wanted to state it. So essential services. So the public, we still have basic needs like food, hygienic items, and everyday household items and goods. Such high demand contributes towards steady employment due to continuing of purchasing. Now, I thought this was interesting. Luxury goods. So high-end retail items such as sports cars, quality beverages, or fashion designer labels. So I looked into this about a few weeks ago, and I found this by accident. And luxury goods, I'll just use this as an example. I don't remember how I tripped into this, but Ferrari, the brand Ferrari. By the way, the ticker, if you want to see it, it's called RACE. And here's a line chart. So this is back in 2016, and you can just see it's just been steadily climbing up and up. And if you remember those first few sectors I shared with you, those technicals on those line charts, those rounded bottoms or those V-shaped, this is Ferrari back in late 2021. It had the exact same or similar rounded bottom as the technology sector as an example. You can see this right here. And then, if you remember, I mentioned this neckline. So this is where the technology sector is as of time of recording, is right here. It's at the neckline. And I alluded to the fact that NVIDIA had a nice breakout because it too was in a similar. And this is right here. Ferrari had a breakout to the upside. If you look at this chart, when I looked at it, what it's telling me is I don't see this brand slowing down anytime soon. And then as a side note, Formula One racing, if you look at the metrics for this, attendance, viewership, sponsorship, all of these core KPIs, they're at all-time highs. So back to the necessities and luxuries. So hopefully that was a little helpful on the essentials, but very interesting on the luxury goods such as brands like Ferrari and Formula One. And I was also looking at some of the high-end handbags, and those too, those are going to be soon at all-time highs. And again, remember, over the last year, the markets have been in a decline, like the S&P 500, the NASDAQ, you name it. But while those are declining, these luxury goods are going up. What makes an industry recession-proof? So number one, couldn't agree more. This is probably a given, but limited competition. So if you're fortunate enough to get a job in a nice industry with nice timing that solves a good problem or a nice challenge, that job in that industry should do really well. And then number two, tangible goods and services. So jobs that produce products in areas of necessities or offer essential services, like we just discussed, will always be more resilient than those that are, I know I'm talking out both sides of my mouth, but luxury orientated. So luxury orientated come and go, but right now it's going or it's coming. And then number three, a flexible workforce. So industries with a flexible workforce and cost cutting measures, they're great to be in. They also have the downside, but if you think of the gig economy, such as like the Uber drivers or the food delivery, not saying they're the best, but they do pay fairly well. They're reasonable, but in time of need, when you need work, that's always a good place to fall back on. And then number four is the global market focus. So diversification in product lines manage the vulnerabilities of economic instability in countries to sustain the business's presence globally. What does that mean? That means if you're fortunate enough to work at a company that has a global presence with good timing in terms of its product market fit, great place to be. Let's talk about some challenges for these recession-proof industries. Heightened competition. So as industries remain recession-proof and more firms or competitors enter, obviously the competition increases tremendously. So you just want to keep an eye on that. And then this could not be more true, but changing market dynamics. So recession-resistant firms still confront shifting market landscapes which affect business competitiveness. And in 2023, if you just look back the last 3 years, I don't think any of us have seen more change. And then at the time of recording, just in the last 90 days, maybe 6 months, with the advent of AI, I've seen more change just in the last few months. And I've been in the tech space a long time, but I've seen more change in the last couple years, couple months than I've seen in years, almost decades. And this is a good one, but dependency on tech. So the demand for high-tech advanced solutions is growing. It makes it hard to keep up with new technology developments and upgrades. I'm laughing because I don't know about you, but every time I turn on social media, there's like all of this new latest and greatest, what GPT can do and what Google Bard can do and, what AI can do. And I'm having a hard time keeping up. Again, this is just in the last few months. So I'll leave you with this. In the next 5 years, we fully expect to see more changes in the next 5 years from a technology standpoint that we have seen in the last 100 years collectively. Okay, this is the second to last slide, but let's talk about some job opportunities in terms of a recap. So we talked about healthcare and education. I went a little deep, covered a deep or wide surface area on healthcare. So I hope that was helpful. And then I just wanted to mention education one more time. I'm not really alluding to the fact of the K through 12. But if you look at these, there's micro degrees out there, and these are really highly concentrated degrees that you can get within months. And again, they're very concentrated and the price is right. And not only that, the job placement it's extremely high. It's quite often you'll get offers before you graduate when you get these little nano degrees or these micro degrees. Number 2, government and infrastructure. What's interesting, I was just talking to my oldest son yesterday about going into law enforcement in Florida, and they pay a great wage. So government and infrastructure, it's not sexy by any means, but again, there's a lot of money being poured in globally with all of this advent of this new world 2.0, or you may have heard the term Industrial Revolution 4.0. It's literally a rebuild of the world. Now, I have not really talked about this, so I thought I'd throw this in there. This is tradespeople. Think of plumbers, electricians, pressure washing, you name it, landscaping. So, real quick on this. The reason why this is so hot and it's going to remain hot, this really boils down to demographics. And to oversimplify this, if you just think of the ages between 18 and 28 right now, again, that's one of the smallest generations, if not the smallest generation in the history, at least in the US. We're coming right off of the millennials, which is now the largest, and they came right off the back of the baby boomers, which is now the second largest. So the generation we're at now, it's the smallest. So then if you zero in on 18 to 28 as an example, and you break it down into thirds, so 1/3 are, unfortunately, they have a record. Potentially, mostly are felons. And then the other third, for whatever reason, they're just not doing much. And then the other third, they're high intellects. And so highly educated. And when they see jobs, they're out there working in the climates in terms of, say, construction, as an example. They want to go to companies that are in the NASDAQ 100 or potentially in the technology sector. There is a ton of opportunity. This could not be a better time to start your own business if you want to have a trade. So in conclusion, just a quick recap. So by utilizing your commonalities between numerous types of recession-proof industries, you may identify with a new industry and that can provide you with stable career opportunities. And by the way, if you're unsure in terms of which is a good industry, leave me a note in the comment section. And if you want me to reach out to you, I would be more than happy to help. Have a quick conversation, and I can share with you just from a few charts if that industry looks like it's going to be a good one. But not only that, is it going to be a good one long term? Build on your strengths. If you can be fortunate enough to capitalize on your own natural skill set and interest, that'll enable you to be more open-minded with a significant source of innovation and growth. And then in closing, be mindful. I thought this was warranted to mention. But again, in this new world, we need to be resilient. We need to be adaptable, and we need to be aware of economic changes. I'm going to say this, and I don't mean to be disrespectful, but when I say be aware of economic changes, people are delusional. I know that sounds harsh. And by the way, it is no fault of their own. It's a consequence of the new world, the new system that we now live in. People have been, by design, have been moving away or farther and farther away from what's really going on. And again, for whatever the reason is, and it's no fault of anybody's, it's just the way our society is being run these days. But this is critical. We have got to be aware of the economic changes because, again, this decade, we are going to see so much change for good and for the worse. And you just have to take the blinders off and just, again, educate. And if you need any help on this, leave me a note in the comment section, or you can reach out to me at any time. And I've got my email, john@easycharts.trade. It's in the notes section. Okay. Hey, thank you so much for sticking around, and I hope that was helpful, especially in these uncertain times that we now live in. All right. Thanks so much.